The Bitcoin halving just happened. This means the supply of new Bitcoin is cut, with demand staying strong. Historically, this has led to Bitcoin hitting record highs and lifting the entire crypto market. But this time, there are worries about the impact on miners, which could affect Bitcoin's price and the whole crypto space. To understand why, let's break down the difference between Bitcoin the network and BTC the digital asset. BTC, the digital asset, is used as a reward for miners who power the Bitcoin network. This network is like a giant public ledger where miners verify and add transactions to permanent blocks. To secure a block and earn rewards, miners compete to solve complex puzzles. These rewards come in two parts: block rewards, created new BTC, and transaction fees added by users to speed up transactions. Initially, Bitcoin transactions didn't incur fees since many blocks were empty due to low adoption. However, as Bitcoin gained popularity, transaction volumes increased, prompting users to attach fees to ensure their transactions were processed promptly. While transaction fees vary, block rewards are fixed by the protocol. This means that the creation of new BTC is predetermined. The first Bitcoin block mined in January 2009 rewarded miners with 50 BTC. Over time, this reward decreases through a process called Bitcoin halving, where the amount of BTC awarded per block halves every 4 years. As a result, the current block reward is set to decrease to 3.125. The Bitcoin halving, which cuts the supply of new BTC in half roughly every 4 years, could impact its price. Basic economics suggests a decrease in supply with steady or increasing demand could lead to a price increase. Historically, Bitcoin has seen significant price surges after halvings, potentially due to rising demand. With over 200 million BTC holders today, demand could be a significant factor in how high Bitcoin's price climbs after this recent halving. Before I give you an answer, smash that like button to give this video a boost and share the video with your friends who might find it helpful. Predicting how high BTC will rise post-halving depends on the time frame considered. After the first halving in November 2012, BTC surged by approximately 40% from $10 to $14. However, after the second halving in July 2016, BTC experienced a 40% decline, dropping from around $770 to $470. Interestingly, BTC rallied before the halving, suggesting a sell the news phenomenon in the short term. Following the halving in May 2020, BTC initially rose by roughly 10% from around $8,700 to $9,700, but these gains vanished within a week due to global uncertainties, including the pandemic. The current halving occurs with similar uncertainties, though less severe with heightened awareness of BTC. Some argue that the halving is priced in, anticipating minimal volatility, while others believe that the introduction of spot Bitcoin ETFs will create strong demand combined with reduced supply, resulting in significant price action. However, Bitcoin miners driven by profit motives remain a wildcard, as their rewards must exceed mining costs for sustained price growth. The halving cuts miner rewards, potentially squeezing their profits. While some miners might struggle, profitability hinges on Bitcoin's price. Mining costs are high, but difficulty adjusts to maintain stability. If unprofitable, miners shut down. The overall mining power and difficulty decrease, potentially helping remaining miners. Bankrupt miners might sell Bitcoin, but demand from spot ETFs could counter that. Predicting the exact impact is tough due to limited transparency. However, past events like Ethereum's transition suggest temporary selling pressure, potentially offset by ETF demand and high transaction fees. The long-term impact on miners remains unclear. Looking back at past halvings, Bitcoin has consistently climbed to new highs. In 2013, it surpassed $1,100. By 2017, it neared $20,000, and in 2021 it almost hit $70,000. However, the peak increases seem to be tapering off with each cycle. This suggests a potential 2.5x increase from Bitcoin's current price. The peak itself could arrive sometimes between April 2025 and October 2025, but it's important to remember this is just an estimate, and the timing is far from certain. The influence of the 2021 rally and the potential impact of spot Bitcoin ETFs add further layers of complexity to the prediction. Before we continue, I must emphasize that this video is not a financial advice. This is for educational purposes only. Beyond the potential 2.5x price increase, other factors could influence Bitcoin's future. ETF investments might soften the blow of a post-peak decline historically over 70% as seasoned investors hold onto their assets. Additionally, central banks dipping their toes into crypto, with some aiming for allocations of up to 2% of their balance sheets by 2025, could create a new wave of demand. However, these institutional purchases, potentially exceeding $100 billion based on those allocations, could also signal a market top similar to MicroStrategy's 2020 grab. The broader crypto market also plays a role. Historically, Bitcoin dominance has waned after halvings, suggesting a rise in altcoins. This trend, along with potential central bank involvement with its significant capital, creates complex market dynamics beyond just Bitcoin's price trajectory. While Bitcoin is often seen as a safe haven in crypto downturns, historical data paints a more nuanced picture. During the 2017 bull market, BTC dominance defied expectations and dropped by 60%, indicating a surge in altcoin speculation. Similar trends emerged after the 2020 halving, 40% decline, and the 2021 bull run, 35% decline earlier in the cycle. This suggests the potential for a significant initial drop in BTC dominance, possibly up to 40% after this recent halving. However, the decline might be more moderate, around 10% as the next peak approaches. Furthermore, factors like stablecoins and a potential spot Ethereum ETF could bolster altcoin resilience during the next bear market. Brace yourselves, altcoin season might be on the horizon. As the crypto market gears up for a bull run, expect a surge in stablecoins and a potential boom for Ether once spot ETFs are approved. These factors, along with Bitcoin's price movement, will all play a role in how altcoins perform. Here is the key. Larger altcoins with over $1 billion market cap could see gains amplified by a factor or two compared to Bitcoin, while mid-caps under $1 billion might be amplified by 4, and smaller ones under $100 million could potentially experience even wider rides with an 8-fold amplification. Remember, this is a simplified way of looking at volatility, and corrections are inevitable. But with the potential support of stablecoins and ETFs, altcoin could see significant gains during the next bull market. So if Bitcoin climbs 2.5x by the peak, large cap altcoins could soar by 5x, mid caps by 10x, and small caps by a staggering 20x. But remember, this is a marathon, not a sprint. Price corrections are likely, especially nearing the top. However, altcoins might linger near their highs longer than in past cycles. Additionally, the next bear market might see similar relative drawdowns. This scenario might be especially true for established altcoins like Ethereum, which could benefit from dedicated spot ETFs, potentially leading to higher highs, lower lows, and even central bank support. If you enjoyed the video, hit the like button, subscribe for more crypto content, and turn on notification to stay updated. Share it with your friends who might be interested. We value your feedback, so feel free to leave a comment below with your crypto questions. Thanks for watching.